I'll work on it again today. Good morning and welcome aboard. Welcome to today's trade along session via Zoom, focused on the S&P 500 E-mini. This part of our service is the trade along service from an educational point of view. We also have trading education for those that want to start out fresh in trading. For those that are experienced that just want to trade better, we have a trading and mentoring service. Should say a trading education and mentoring service. So ask about it. The first order of business here is to get you settled into our service, this trade along service via Zoom. Hey, Mark K. Hey, Mark, are you part of our friends and family? Just let me know back in chat. Santino, how are you? Let us know if you're part of Sal's friends and family. So Sal's friends and family is regularly priced at $379 a month. 2 months for $500, and then it rolls over from there. 2 months $500, 2 months $500, depending on what you're doing. Right now we have it on special, which is $100, and I have a few of those links left. So if you want to have that link, let me know. I know I would, so I want to make sure that you have the information so that you can either accept or not. In other words, make it your choice. It gives you what I just described for you for $100 a month. It rolls over at $100, which is a steal, as Sal was saying yesterday. So if you're on the fence at all, pony up and get yourself in so that you can come and go as you please. We'll be setting up the other pay plans shortly in PayPal. If you would like to have the higher pay plan, let us know too. I know people really appreciate this business, this opportunity, the opportunity to look to develop consistent profitability in your trading. They really enjoy, or you really enjoy. We appreciate the feedback. This trade along service on a daily basis to help you in your trading, the morning session from an educational point of view. If you like what we're doing here, make sure you tell your friends. We do like word of mouth. Send them right now. We're going to have we have a bunch of stuff, right? We have Zoom Trade Along. We have tradealong.live. And shortly we're going to have Trade Along Trading Academy. And we're going to see if that sticks. I'm looking at that pretty hard. If that's the case, and that'll be the drive into the service. And we're looking at that, and that'll offer a number of opportunities for you as individuals. New traders will have a 101 type setup where they can learn how to get set up so they can trade. They can learn about getting set up for the S&P 500 E-mini, so that this session can be the morning session between 9 and 12 can be Sal and you when it comes to the trade along part from an educational point of view. And we'll reset some of the disclaimers and some of this and some of that to make it a little bit more coachable and understandable how we are dividing up this opportunity, which is to listen, watch, listen, learn, to trade and earn. I mean, that's really what this is about. Your ability to be visual and also audio when it comes to class time, Zoom class time, when it comes to the Trade Along Trading Academy approach to what we're doing. We love the idea of being able to do this in Zoom. We started out in GoToWebinar. We started out before that, before GoToWebinar became part of what we did. And now we branched out into Zoom, and we think Zoom is a pretty good home right now. There's a couple features I'd love to have. One is to be able to click on a name and then talk to you personally and privately. They're doing so many updates. I've got to reach in to find out if I can get that done, because that would be a real help, you know? Adam, absolutely. Just remind me, okay? Yours is in the lockbox. Okay. I just had a reminder that I promised somebody the friends and family rate, coming up, because they're just coming out of an issue, and they asked me if it was okay to stick around until then. I know, Roop, when's your time coming in? Let me know. Hey, Don, how are you? Douglas P. Hey, Glenn KG. Hey, Mark K. Did you answer before? Probably did. I might not have seen it. Dave K, are you in or are you out? Let me know. Santino. Hey, Tom, how are you? Philip. What I forgot to do was send out today's invites. So if you're interested in sticking around and you want to get the thing, I got a couple left. Make sure you get them. I got a couple of holding pattern. We want to make sure we take care of them. So it's going to be $379 a month, 2 months for $500. It'll roll over at those levels. You'll go through the morning session with Saul based on his scalping levels and zones and his commentary during the morning session. The feedback has been phenomenal based on those that are really doing well based on their ability to be part of Saul's trade along world during the morning session. And we appreciate the feedback. And it was interesting hearing Saul describing the fee structure yesterday, which I agree with, is that individuals that are doing well because of Saul and this service should absolutely pay up and pony up for what we do here on a daily basis. There is no free lunch, even though there's some places you could go. I mean, there's places that I wouldn't spend 10 minutes in, but people do. And that's just me. So Sal's going to take over here shortly. Make sure you're all signed up for his subscription for this trade along via Zoom. Daily opportunity for you to be part of it, to take advantage of it. If you need the discounted link, raise your hand so you don't miss out. Hey, Glenn, welcome. Galend, welcome. Mark L. Mark, pop back in after you go, after you make your money, go back to sleep, and then pop back in and we'll test your camera. If I see you pop in, also, I think we're connected on the phone, right? Like through chat. You can always chat me, and then we can set up a time to do it. And Don, I got to figure out how to chat with you. Can you chat on that phone? Anytime you want to come in, Saul, I am here and ready for you. So, Dave, you do not want to have the friends and family link. George T, how are you? George, you're part of Sal's friends and family, right? Let me know back in chat. Hey, George, you're part of Sal's friends and family, right?
$44.04. 44.04. Resistance above at 14, 23, 29, 34, and 43. Support below at 96, 86, 78, 71, and 65. Pivot 04. Support 96, 86, 78, 71, 65. Resistance on the upside at 14, 23, 29, 34, and 43. Welcome, everybody. Those of you who are new to the room, we are trading mini S&Ps here. We give you our levels here to help you guide us as a guide to the day, giving us areas of which we think are important for us to take a position and have a setup to trade, whether we're long or short. We use those levels as one aspect of trading, and another aspect of trading is using the price action activity that might occur once a market paints some bars. Combination of both gives us the setups that we're looking for to trade, and so we do here on an everyday basis. So if anybody has any questions, please feel free to put them in the chat box area. There's a nice rotation there off of the blue band there really quick if you were looking for a quick little scalp. All right, not too bad, and pretty right there. Very good. All right, market reacting to the FOMC. If you were trading with us yesterday afternoon, or if you traded yesterday afternoon during FOMC, the market moved right to our upside resistance up there at 06 and fell off very nicely, giving us a chance to scalp. You have to be very careful, obviously, if you're going to trade the FOMC, as that's always the case with the FOMC. We hardly tell you not to trade it, but if you were going to do anything as far as trading was concerned, levels would be kind of the opportunities there. Hopefully, some of you were trading, and maybe some of you took advantage of the opportunity there, and that was a nice rotation off of the 06. But again, pretty much no risk at that point as the market, really was having a very fluid moment as you were watching, if you were watching at all. The market was very fluid, and you could have easily. Look, it's a risk reward type of thing. We tell you not to trade because obviously it's very risky, and the goals are kind of you have to expand your stops, and as long as you understand the risk, which is what we are always talking about here, you can obviously trade it accordingly. All right, market shifting up here a little bit, drifted up to the 11 area there. We have 14 on the upside. As you can see, the volatility is still there, at least in the morning. if you were watching the trade yesterday afternoon, the market got really quietish and started rally mode. Rally mode always gets us back into these slow markets, where we're looking to scalp about 2 to 3 points. In the morning, we were more at 4 to 5 point stops. So definitely have to take your cues from the market volatility, and it can vary from the morning to afternoon to late afternoon to early afternoon. All those. Obviously, not in the right order there, but yeah, you can see that the times, the volatility could obviously change as time goes on, as the market dynamics change as well, right? Because we were obviously whipping around, and the market was a little um, nervous early on, and because of all the things that are happening, breaking over the last few days, and then all of a sudden the FOMC was coming out. So we'll see what happens today. Every day is a new day. We try not to have any opinions here as to which way markets are going to proceed. We just take each day as it comes and trade the market, whatever the market's giving us for each particular moment in time. That's what we do here every day. Again, if anybody has any questions, if you look at the chat box area right now, we're going to give you the levels that we use, as said, as a guide for the day. There they are for us. They are there to help us guide us through trading opportunities that might occur. And we are looking probably at this point here right now about 3 to 4, maybe 5 point stops. Liquidity is a little bit light, but coming back is not as thin as yesterday. So we could definitely tame it down to maybe 3 or 4 points instead of 4 or 5. And obviously, we were getting those opportunities on the profit side as well. It wasn't just a one-sided affair here where we were keeping up a large stop and not being able to get that profit target as well, because we were. So you could see here, yesterday the volatility was a little bit greater, and it's a little bit less today. And look, it's rallying again. Not a big surprise, right? Market seems to always, the volatility seems to always get sucked out of the market every time it gets in the rally mode. But it's fine. It is what it is, and we'll see what happens as the market now upticks here a little bit. We'll get a little resistance up here around the 14 area. Again, keep your stops in place no matter what. That's always the case here. You have to keep your stops in place, so that way you minimize your loss in case we are not on top of things. Nice rotation there. If you did get in against our 14 area, got up to 13 and a half, so be a little bit careful up here. Got up to 13. Some of you scale in a little bit differently, so obviously your scales have to be taken into account. So maybe lessen the load up here if you got the top end as we come up here to the 14 area. Nice quick rotation off of 13 and a half. And so it's a little bit riskier right now, but just keep your stop. If you didn't, obviously, if you have to watch the price action is going to dictate your action and how you treat a level, and how if we just miss a level, does that mean that we're going to take, if you got up to 13 and a half and rotated down, are you going to are you going to consider it a level that's been used or not? It's something that you have to consider when you're trading. So making an adjustment accordingly is important. Obviously, everybody scales in differently than other people. Nobody trades the same way here. We've talked about this many a time. And hopefully we understand that as we push up here again a little bit. Next resistance level is up here at the 23. So you have to take into consideration the price action just prior to the entry point at the level there at 14, got up to 13, 13 and a half, and rotated down. Technically, maybe it was it worked, the level worked. And so even if you didn't get 14, because we're not going to be perfect, you have to consider it the level being done with. Now we continue to uptick here a little bit. Next level of resistance we have is up at the 23 area. That's the next level where we have as some resistance. This market continues to uptick here. Again, this is trading off of yesterday's FOMC situation, and I guess they it was all over the place yesterday. The tea leavers were tea leaving at good time, big time yesterday, and hopefully, you were able to take advantage of some of the opportunities there if you were trading late in the afternoon, as we're coming up here to the 23 area. Again, make sure you keep your stops in place. We'll work in the 23 area now. All right, nice rotation there against the 23. This time you got 23 if you did take it, and now you're getting a nice push down here. Again, you have to make adjustments to the price action, right? We always talk about that. The price action there against the 20 to 15, the 14, got up to 13 and a half, traded it, came off. Peter, if you have any questions, if you just look at the what's the issue there with the no reason to swear there, Peter. We're just trading. If you have anything to say, you can just put it in the chat box area, but let's try not to swear. How's that? That's not like nobody's heard it before, but it just nice rotation there against the 23. Again, we talk about adjustments to market conditions. That's what we're doing here in regards to the 14, and then we come up here quickly to the 23 and have a nice rotation off of that. So you always got to stay focused. If you did get stopped out against the 14, then you are looking at the 23 and you're getting paid off here very nicely against that. And so you can't just let one trade interfere with your mind, with the process. Right. Market continues to rotate back up here. Next level of resistance we have is up at the 29 area. Market is enjoying what Powell and company have decided. Not too bad. They like the fact that they said they're not going to. Well, they said they're going to start looking into tapering. So that I don't know. I don't know what is good or bad anymore with what these commentators or how these people read what they're reading off of what they're saying. Obviously, you saw everybody not understanding what was going on yesterday during the craziness that was occurring during the trade. But again, we're not trying to figure out what's going on when it's happening. We are just trading and giving us, hopefully, the market gives us opportunities to trade and to scalp the market. Which again, if you were trading yesterday afternoon, if you took our level we had the high there at '06 with absolutely no heat whatsoever. You could have taken advantage of that by obviously trading less, trading smaller, understanding the risk involved, making sure your stops are according to the volatility. You'd have to probably have definitely 5 or 6 point stops at that point. But as you can see here, you were getting those rotations very easily off of those opportunities if you were so inclined to trade the FOMC stuff. All right, market continues to uptick here. And next level of resistance we have is up at the 29 area. Again, if anybody has any questions, feel free to ask them in the chat box area. Market continues its little rotation to the upside. Well, that's my take on the policy. He basically just calmed everybody down, I think. Kind of told everybody what they wanted to hear. It wasn't a big surprise. And kept everybody happy, the market happy. Like I said, he wasn't really going to say anything that was going to really hurt the market that much. So that's basically my take on what he was saying and or doing yesterday. And that was kind of an obvious situation where he wasn't really going to be hurting the market that much because they're very market sensitive, very market sensitive group. Those Fed people. I work in the 29 area here. Again, just keep your stops in place. All right, and market coming up here, trying to see what it wants to do up here around the 9 area. There's a little bit of resistance up here. There's a little area here. But no matter what, keep your stops in place. That way you don't miss out on the next opportunity when it presents itself. Federal Reserve avoided a shock to equities in an already weak September, but will investors remain comfortable with the hawkish tint? As expected, from its decision yesterday, members pulled towards rate hike expectations on a dot plot. And the Fed Chair Powell telegraphed a tapering announcement at the next meeting in November. Tapering is expected to end around mid of 22, and a liftoff could occur after that. Although 23 seems to be the most likely time for a start of rate hikes for now. What is clear is that inflation is likely to be a determining factor for the liftoff and the pace of the rate hikes, said an analyst in Deutsche Bank. If inflation is at or below the Fed's current 2.3% core PCE, liftoff is likely to come in 2023, consistent with our views. However, if inflation proves to be higher, with inflation expectations continuing to rise, the first rate increase could migrate into 2022. And so we are getting a little bit of a rotation here against our 29 area. And nice little push back down in here. Again, we're keeping at least 3-4 point stops here, only because of the slippage that's involved in these trades right now with the volatility at this moment, but that could change. So nice rotation there against our 29 area there. So that's where they're looking at. Another analyst is expecting a gradual liftoff, and notes that the Fed is expecting inflation to run at 2% through 2024, even as they keep rates below their neutral 2.5% estimate. And that shows how committed they are to forecasting as strong a labor market recovery as possible, but was also the discussion and debate about asset purchases and how to communicate a tapering within the FOMC and the markets a waste of energy. So I don't know. The market is concerned about their tapering, and they finally said something about it, and the market took it pretty good. I mean, considering look where we're at, right? Bond market even handled it pretty good. They really 163 handle. We're still on this 163 handle that we keep talking about. So they haven't really done anything too exciting as far as movement. They really didn't jerk around the bond market anyway, and the rates. All the time spent deliberating on the prospects of tapering and the hours of the market participants focused on it could be much more efficiently spent elsewhere. Well, BlackRock said. We have argued for some time now that the economic conditions were ripe for a more normalized monetary policy, and that this, in fact, could migrate the possibility of rising unintended consequences that could risk undermining the recovery and the Fed helped engineer. So they want to blame the Fed for keeping too much money in there and could maybe hurt the economy because of maybe inflation fears that they could be, well, they just want to blame somebody. Everybody's got their own like spin on the Fed stuff, but they didn't do anything that was going to harm the market yesterday. Again, they just talked about tapering, which again I think was welcome to the market. I don't think it was a bad thing because everybody's been debating it for such a long time. I think they kind of took it in stride. They didn't say they were going to start doing it right away. They said they're going to still look at it, so that kind of calmed everybody down. But at least they're looking at it, and they're going to probably talk about it next meeting, so it calmed everybody down. So all in all, it was not a again, like I said, they were not going to do anything to shock the market to the downside, considering where we've been the last few days as the market again continues to uptick here. Next level of resistance we have is up at the 34 area. The broader stock market had a choppy reaction to the Fed yesterday, finishing solidly up, but well off the highs of the day. Investors look at the balancing the positives of the central banks dealing with inflation with the negatives of removing accommodations, even with rates still at zero. Accommodations meaning tapering. Still, S&Ps have a chance to finish the week higher with two strong sessions. It's currently 37 points off the flat line in the S&Ps, and right now they're 47 points off. So you can see this was written a little earlier before we started trading. So another positive rotation here. Investors look to be balancing the positives of central bank with the negatives. Okay. 10-year yield still saying the same. 163 handle. That's all you need to know. 133 on the yield in the 10-year. Kind of not moving. I think the bonds will at some point determine what's going to happen with the S&Ps if we move from a 163 handle. Again, the bond market's always going to tell us something. All right, market continues to slowly try to uptick here a little bit. Next resistance area that we have is up at the 34 area. I haven't heard of that one yet. Could be a new one. You understand what it means? I have no idea what it means. Oh, there's a nice rotation there for you. Again, gotta love those riskless trades, right? I mean, just gotta love those trades that just give us those nice little opportunities there for us. Nice little trade there for you. All right. Yeah, I guess everybody's going to sleep early. Super. Oh, great. That's a new one. And now we can just peel some off here if you want. Nice little trade there for you against our 34. Nice little rotation coming down in here. This is probably where I cover some. If you still want to try to stay short. And there are the levels for us. 14, 23, 29. Obviously, it's running up. It ran through some of these support levels really quick. Resistance levels above 43. We've got 51, 58, 64. If just you want to add those on there, like I said, I know we never know which way the markets are going. all we can do is react to the opportunities that present itself for us. Everybody should have got to 34 because it got up to 34 and a quarter. So you should, if you're playing the level straight up, you should have got filled. The levels above 43, we have 51, 58, and 64. All right, nice little trade there for us. Nice trade against the, actually the 29 kind of worked as well. Had to take a little bit of heat on that one. That one had to work a little. 23 worked very nicely. With the 14, we talked about, obviously, the 14 was a little tricky. We had to make an adjustment there because of the fact that we got filled at the 13 and a half or got up to 13 and a half and then rotated off. So technically the level got filled, and definitely warned you about that. And so then the 23 worked very nicely. The 29 had to take a little heat on that, but that one worked as well. 34, obviously, as you can see here, worked exceptionally well. And if you're trying to stay short, just have a trailing stop. You can take a little bit more off of this one. Support right now would be, the 29 was the first level, and then really up here at, well, okay, well, there's giving you the answer. It's still chopping around, so take what the market gives us, have a trailing stop on anything else. That way you can lock in some profits. So the market seems to believe the more hawkish the Fed gets, the more likely they will control inflation and or choke the recovery. The puzzle is that even if the dots are correct, real Fed funds should be negative and very accommodative historically for all the forecasting period. As such, the market has a very dim view of the ability of the economy to withstand rate hikes, or alternatively, the quantitative easing technicals are overpowering everything at the moment. That's an interesting thought, actually. That how can the market not I mean, the market is so like zeroed in on zero interest rates. I don't know. I think the market can handle interest rates going up. See what happens. They do have a issue in Washington with the budget that always occurs. You know, because they would like to make it an issue. So they always go down to the last moment here before deciding what they're going to do with interest rates. I mean, with the budget situation there in Washington. You got to love the hypocrisy there every time between both sides of these people that we call representatives. Instead, they're just ideological idiots, not trying to work it out for the best of us, just for the best of I don't know who. It's crazy what they're doing there. Every time they get to at this point of the year that we can't can't fund the government anymore. And then let's be tough. Let's blame each other. A bunch of idiots. Washington is the most dysfunctional piece of shit that you've ever seen. No opinion here. All right. Next level of resistance we have is up at the 43 area. And it's like a joke. It's just becoming a joke over there. It's just becoming a joke. Evergrande is rallying in Hong Kong with the market open after the holiday, but shares eased off of the early spike. The People's Bank of China, the Chinese government, put in $18 billion into the banking system through repo agreements. And the net injection of 90 billion won, according to Bloomberg. But there's still some uncertainty about the property companies' dollar-denominated debt payments. All right, market continues to uptick here. They like. Next level of resistance we have is up at the 43 area. Again, 1 second.
Hey, quick shout out to Mohammed. Hey, Mohammed, how is it now? And are you part of Saul's friends and family? Let me know back in chat. Rosemary, let me know if you want that link we talked about yesterday. Get yourself signed up. Hey, Kevin B, welcome. Hey, Pat. Hey, Anand, how are you? Anupam. Dave C, I don't think I got an answer. Let me know back in chat.
All right, market here continues to uptick here. The next level of resistance we have is up at the 43 area.
Hey, Mohammed, I'll send it out to you in a minute. I'll send you out a private link. You should have a series of 3 charts in a separate chart window, 2 time frames for the S&P 500 E-mini and a 30-year bond chart. It could be an internet access thing, so check that out on your end. Not a problem at all. You should see my mug too at the moment.
Huh. Well, surprised you're there. You were gone for a while there.
Yeah, no, I didn't realize I had the shutter closed.
Oh, I thought I had control over that, and I guess
You
I don't.
do.
Huh?
You do. You could. You got to have the camera hooked up though.
I know.
Once you get your once you get that deluxe motion picture camera that was sent to you
No,
in
it's
a
sitting right here. I can
nondescript
see it.
nondescript box.
I see it right in front of me. It's gonna stay right in front of me too.
Got to throw it on top of your screen. Got to put the you have a privacy cover on it. I think that came.
Privacy,
That was
nothing.
that was the deluxe edition.
Great. That's good to know. Good to know. It'll.
As I
Look
said,
right at it.
are you ready for your close up?
Oh no, no. It's staying right where it is. Looking pretty. I'll
I'm
leave that for
updating.
you, and Don and Mark. He's got that California tan going. He'll look perfect.
Right. Yeah, we have to get Mark on here. We went out and bought one of those motion picture, from the Academy of Motion Pictures. He got his camera from.
Well, yeah, he's got a whole studio, I'm sure.
It could.
Yeah.
I don't doubt that. But we're going to see. I mean, he's in makeup now, so we'll see.
Well, yeah. It's early there for.
Where'd your buddy go?
Who's that?
What was his name?
Oh, the one that swore?
Yeah, he like came in and like,
Yeah, I
and then he ran. I expect him to be back. That actually scares me.
I thought it was your friend, actually.
Well, could have been.
My friends only say the F word when their microphone is on.
Yeah, I was thinking he might come back and because he sent that out to everybody. So we're gonna have to grab authority back. We'll see.
Yeah, I don't know who he was or what I never seen him before, so I thought he was your friend. So can I tell you?
Well, you listen. I'll be right here if you need me.
Oh, well.
Not going anywhere. Okay.
All right. Well, by the way, are you in your laundry machine's right behind you?
Yeah, you can see him.
No, but yesterday your camera was on, and I think it was your wife doing your laundry for you. She had to put it on. She had to. You can't really tell, but she walked across the screen with laundry.
Oh, interesting.
She's famous now.
Hey, listen.
She's famous.
When you can get Raquel Welch to do your laundry, you're in good shape.
Wow! Wow! Did you hear that?
No, the door's closed. There are a lot of people that probably don't even know who Raquel Welch is. She was something in her day.
You would know. So would I, actually.
Hey, listen.
So would Mark.
I was a youth at one time. I was a youth. Just I'm feverishly working after your comments yesterday in the background for you.
Comments. What does that
Oh,
mean?
yeah. You were mentioning that that you had priced this thing as an introductory so low that it was a steal.
Is that what I said?
That wasn't you?
I don't know. I don't remember. I don't remember what I said. Those are the exact words. So
Okay.
I could have said that.
Everything we have here is on videotape. No, actually tape, right? I don't know what it's called. We're digitized. Everything we're doing is digitized. So you don't know if it's Like we don't know if Mark's really going to be Mark.
It could be an alter ego.
Anything. Californians, they tend to adjust reality. You might have to see what his reality has adjusted to.
Well, he just needs to be Don's wingman. That's about all I can say.
Well, we don't know what
misses
we have. We don't know what we have in store for Mark, but I know that he does have a wax physical representation of Raquel Welch
Hmm.
in his beach home in Malibu.
Okay, I didn't know that either. Next time I go visit him.
Well, I think what we had is in yesterday. He is the one that has the G. Aren't they up to like G8s now? I used to say G5 used to be the hot plane.
I don't know. I don't know what the hell you're talking about. G5, G8. What is that?
Guy from it's a very fancy jet, and we do have one of our clients or one of your clients that flies private jets.
Oh, I didn't. Yeah,
Ilmar.
he still hasn't come over and picked me up.
That's right. He's done a few flybys. He hasn't quite made this. I saw a rope go by with some knots in it. I'm not sure what that meant.
And
Hop on
the
board.
rope that my wife gives me, say, "Here, hang yourself," so I can get the insurance money. Well,
Yeah, that's a bad scene. You still sleeping in the same room, or did you finally move?
No, I'm still in the same room. All right, this market, they love what the Fed said yesterday. It continues to rally here. Next level of resistance is up at 43. We gave you additional levels in addition to our initial rotation of numbers. We get there they are, 50, 43, and then there's 51, 58, and then 64 on the upside. And orders are coming back into the order book, so it's not there's at least it's not single digits or double digits only. It's like 100 lots. So should keep things a little bit more contained. As far as volatility is concerned. Things have definitely slowed down here a little bit. Again, we're rallying markets, and that's usually what happens. We don't get the ebbs and flows as easily as we do when the markets are rotating to the downside. But it is what it is. Take what the market gives you. We always talk about that, and that's obviously what we are trying to do here. Anybody has any questions? Feel free to put them in the chat box area. All right. Seems like we're going to be kind of just bouncing around here a little bit. Bond market not going anywhere. Bond markets are definitely kind of just hanging here. Kind of totally ignored the whole rotation to the downside and coming back up here, ignoring this rotation back up here. So see what it wants to do there. But again, I think we're going to get some indication of what the market might want to do from the bond market at some point. Right now, not really. So they don't think interest rates are really going anywhere. They don't think it's so bad with the tapering statements that they made. And the market kind of likes it. Yeah, we're just kind of hanging up here on the highs. Not really down ticking. It seems like it's going to be one of those rally markets. Support right now would be back at around 24, at least for the time being. And again, if anybody has any questions, feel free to put them in the chat box area. We ran through our levels, which kind of worked out well for us today. So if anybody, those are just the levels that we gave out. There's also price action opportunities that might occur. And combination of both gives us opportunities to trade the market. And gives us setups to trade the market. Right, market continues to uptick here. I'm going to have coming up here to our 43 area. Got up to 42 and a half there and bounced off a little bit. Still on the same bar though, so we'll see what happens. All right, if you did get in there at the 42 area, you get a nice rotation here. Again, depends on how you fill in. All right, again, we're right again here with the same situation there as with the 14, where we got up here to at our lower end of our entry point there against our level. And so consequently, you have to be a little bit careful here with the 43 area. supposed to say stay in the short grass. That's what you're supposed to say. In the short stuff. You're gonna get it right. Hmm. Now you're pushing it a little. Things have quieted down here quite a bit. Now we can just be patient and wait for opportunities, price action opportunities. We had our levels got triggered early on this morning, and now we're just kind of end at 43 here. Obviously, if you had scaled in at 42, you probably obviously got filled. And 42 and a half probably did not, only because only 28 contracts traded there. So it's not like you had a good opportunity there to get filled at if you scaled into the 42 and a half area. But if you did get in at 42, you got a very nice rotation here. So you got to be a little bit careful here with the 43 area. Obviously, we would have liked it on that last rotation up there. So there's always going to be another trade. Just remember that. So if you cancel it, that's fine. Next level above is 51. Support right now would be back at around the 24 to 26 area. Uh, yeah, that I agree with. It's not the best reason. Let's put it that way. Yeah, that's not. I agree with you on that. It's not. It's not the best reason. I mean, we had a nice trade on the with all our levels. Hopefully, you were able to jump in on some of them. Hello there, Mohammed. What's going on? We are trading mini S&Ps here. We've been trading since the morning, and we've had some nice opportunities with the levels that we gave out this morning. We are scalping the S&Ps, mini S&Ps. We put together a price action opportunity that allows us to find setups to scalp the market. That's what we do here on an everyday basis. On the screen, you should see three charts: a 5 minute S from right to left, a 5 minute S&P chart, a hourly S&P chart, and a 5 minute 30-year bond chart. Those are charts that you should see on the screen. Well, the charts are there, so oh, let me see. How's this? Do you see them now? Yeah, okay. Now you should see them. It was my bad. I was my fault. Sorry about that. Sure. We have actually there's two types of subscriptions. Well, a couple subscriptions here. There's um, the daily room rates, which you just come in here on a daily basis, get our levels, and also we have education package that we have that that shows you how to find these opportunities to be able to find price action opportunities, basically, so you can become an independent trader, independent of myself, where I would give you these levels in the morning. And you would be able to find them, use the same concepts and ideas, and you can use the same concepts and ideas in other markets as well. So we have an education course that is independent of the room. Both of them, the room is every day, and the education is we work on that. Uh, we work on that. After not after hour. Well, during trading hours or late in the afternoon, so that we can use uh, real life charts to explain some of the concepts and ideas that we have. I have no idea what Shiba is, and I would not, even if I did, I would not be. That's not what we do here. We are trying to find opportunities based on the price action in the market and on an everyday basis. So not stocks. We're trading equity futures on the S&P index. There's the link for you in the chat box area. All right, next level resistance we have is up at the 51 area. Yeah, down, sorry. All right, things can continue to rally here. It seems like they flagged a little bit there. Now continue to push upwards. Next resistance area we have is up at the 51 area. Above 43, we got 51, 58, and 64. Shiba is crypto. Great. Great. My prediction there is I stay away from that. I don't understand it, and consequently, I have no problem not having an opinion on it. Should you own some in your portfolio? Probably. But as far as trading it, nada. So that's my opinion on Shiba. Any cryptocurrency. And like I said, I think you should probably own some in your portfolio, but as far as trading it, eh, not my cup of tea. Any of that, all of those, that whole area there, it's not what I'm excited about doing.
All right, we seem to be just kind of hanging up here. Looks like we're trying to flag. Looks like it wants to continue to uptick. We got next resistance up there at the 15.1. Right now, support would be around the 34, and we'll see what happens from there. Be patient, wait for the opportunities here. Market is upticking, so some of the volatility is being sucked out of the market, and we'll see what happens.